So one of the ways that people tend to get caught is they'll go on vacation. So one of the internal controls in accounting, when you're studying accounting and you're learning auditing and all that fun stuff, is mandatory vacations. And it's one of those things that kind of don't sit right. You're kind of like, oh, you got to take a vacation, but it's really to get that person out and let somebody else do that role, because another set of eyes will oftentimes find some things that maybe just don't look right, and then with a little bit of digging, you may either find there's an error, which is just as prevalent and can also be just as deadly, or fraud. So mandatory vacations and job rotation due to that is definitely a good way to make sure you're protecting yourself against fraud. Another way is to check in. I mean, you can't be an absentee owner when you're the only other person who has access to the books. You need to be cognizant and aware of what's happening. You need to review your bank accounts. You need to review your bank statements. You need to review your profit and loss and your balance sheet. You need to review your accounts receivable and accounts payable. If you know a client has paid you or a customer has paid you, and you're reviewing your accounts receivable and you're still showing that client owes you money or that customer owes you money, that's an easy tell to say, well, maybe that money did come in, but it never got credited to the correct account, and that account's just left floating out there. If a bookkeeper or somebody who's committing fraud knows that it's not getting looked at, that's basically inviting it. That's asking for it, because they know they'll never be caught. Best way is to institute proper internal controls in terms of separation of duties. You want to make sure that no one person has too much control over either the cash coming in or the cash coming out. We always look at it in terms of a triangle, and if one person controls two corners of the triangle, they can very easily commit fraud, and even a third person or a second person being involved can't catch that, because if somebody's writing checks and reconciling the bank, well, they can write a check to a certain person, and then by the time it gets to be reconciled to the bank, they've changed that name to make it look like a legit check. So internal controls, mandatory job rotations, and not being an absentee owner are three really easy ways to make sure that you're not being subject to fraud.